Hi traders, and welcome to the technical analysis market wrap on Friday the 18th of November. So we saw a fair bit of consolidation this week. We see the a big move last Friday has consolidated at some very key levels. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD. And yeah, look, we've seen a little bit more weakness over the last few days, but it continued on its surge from last week, early this week. And you can see it's pushed right up. The role reversal zone that we would have expected to hold up was around that 67, and it did push past there, almost to 68. It pretty much just grasped a 68-cent mark before it actually did pull back, and now it's trying to actually break through past the 67-cent mark. So, look, really big move. It's obviously been a big exaggerated move, and no real surprise to see it weaken at this point here. There is a role reversal zone here, no question. The 67 is a fairly strong level for it, so it wouldn't surprise me to see it work underneath there and potentially just consolidate back under. Now, a lot of this is going to depend on the dollar index, which we're going to check out a little bit later, of course, but the Aussie strength has been very good, obviously, over the last few weeks, and a little bit of a pullback is relatively healthy. We're about to see a 20-50 moving average cross, which hasn't happened, obviously, since way up here at nearly 69 cents. So it's boding well for a continuation on the long, but two things can happen here. We can either consolidate under the 67-cent mark, which is fine, maybe see a bit more weakness and a pullback up to around the 20 moving average, and then we can take it up again, or it may well consolidate above this level, above the 67, and if it does that and does a series of higher highs and higher lows on a smaller time frame, we can look at breaking that 67.80 area where it did pretty much touch, and then start looking towards the next level, which the real next level is actually 70 cents. So there is a fair bit of movement that is possible for the Aussie USD, but really we just need to see which direction it takes now, whether it stays underneath the 67-cent mark or whether it consolidates above it. It's really right in the middle of that zone now, so we wouldn't be actually doing anything right now until we get some direction. To close below the 67-cent mark on a daily, I'd be looking at a little bit of weakness early next week, maybe down to that sort of 60-cent mark, even at a stretch, maybe 65.50, but it would have to be fairly weak to do that. It's been a big move. It wouldn't be a big surprise, and certainly possible, but probably the 20 moving average will be the one that I'd be looking for, letting it catch up to that, or failing that, if it holds above the 67-cent mark and starts to consolidate around this level here and looks like it's making a series of higher highs and higher lows to go long, and we get a break of the 67.80 level, 67.90, then we start targeting the 70-cent mark. I think we're pretty good for a big move up if we get the consolidation at this key level. All right, we'll move over to the US dollar CAD now, and look, this found support last week really at the role reversal zone that we were talking about. No real surprises there. The 132 area is the one that we were hoping would hold up, because realistically we've already seen a big drop, and look, it's been a big series of lower highs and lower lows, no question about that. Dead set downtrend, 20 moving average crossing the 50, no real surprises here, but it is good that it actually respected the level that we were looking for. Hopefully you're able to take your profits there. That is definitely the level you wanted to be taking your profits if you were going to, if you were involved in that short. So hopefully you did, heed that warning. Look, with the consolidation that we're seeing at the moment, this has been a week of really not much movement. It's 100 pips either side, but considering what's been happening over the last few weeks, it's relatively small. So I'm seeing it consolidate here now. Like, if we get a whole week of consolidation, I think that's probably the key here. We saw a really big move in the indices last week, and that was great. But what we want to see now is a really good, strong consolidation zone lasting a whole week to really give the market a chance to feel the level, understand where the real fair value is, and then I think we can get a bit of a continuation from that point. So if we do see this consolidation here, and then we get a break below the 132.20, then it's more than likely going to be falling back down to the 130.90 to 130.50 areas around this role reversal zone here. And that's because it's had a chance to consider this level. If it's going to hold, it's going to hold now. If we get a daily close below 132.20, then it's really going to start targeting the lows of around the 131 to 130.50. So bear that in mind. But of course, if we can see a continuation of strength and we start to push higher again, we can start to target these lows again. The next real level is 135. You can see here, I'll pop a line here for next time. This is the level that is more than likely going to be the target if we do get more strength out of this move. So just bear that in mind, that the key levels here are the 132.20, a break of that, and we're going to start targeting the lows. And then, of course, a move up and a series of higher highs and higher lows on a smaller time frame around this middle of this zone here. And we're going to start, we'll be able to target the 135 to 135.20. So that's pretty good trading on the CAD. All right, US dollar yen is another one that respected the level. You can see a week of nothing really. We saw a big drop, but the important role reversal zone did hold. You can see here, we drew this last week. It did hold up here, and it's been fairly strong for the week. It's tried to test the lows, but it failed to do so, of course, and it's been basically consolidating ever since. Very similar story to the CAD in a sense, where we'll pop the horizontal line there. If we are going to see a little bit of strength on a smaller time frame, like a 4 hour or 1 hour, and we see a series of higher highs and higher lows, the target's going to be the 142.80 to 143 area. That's the little roll reversal zone that we've got through here. The bigger target will be the 145. You can see that line is there, but at the same time, it's got a fair bit of work to do to get that. It's got to get through this target first. So I'll be certainly taking my initial profits, or at least breaking even at this level here. A big move would see it get back to 145. So a daily close below this level would be fairly detrimental to this one, because a close below the 138 sort of 80 area is going to really signal that it's had a chance to consolidate and work out where it wants to be, and where it wants to be is not above this roll reversal zone. So if we get a close below this level and we're trading below 137.80, then we're going to start targeting the 135 level, which is the next real support zone. So I'll pop a line there as well, because that's the target that we'll be going for if we get a daily close below here. A daily close below the 138.80, and we're going to start targeting the 135, okay? And a bit more strength, and we'll start targeting the 130. I think it's going to be really good trading. Like I said, this consolidation this week has been a big plus for moves that were so big. So now we're going to be able to target some of these really key levels, and we'll start to see mini trends forming inside these zones. So yeah, I think it's really good trading. All right, we'll move over to the dollar index now. Dollar index played the game as well, came down and touched our level at the 105, really was our level exactly. That line's a little bit below it, but it did touch the 105. That was what we were targeting for the short. If it did break through this roll reversal zone here at the 107, this was going to be a very logical target. But, nearly the 200 moving average, but more importantly, the roll reversal zone. Two very key reversal points and a support point, two support points actually, if you look at the double bottom from there before the big move up. And that was always going to provide some sort of support. It would have been a miracle if it had kept going through there without at least consolidating. So I move up here. Look, it's right in the middle of the channel now. Look, it has retraced a fair bit. If you look at it, the high really was, 106.88. So it's a pretty reasonable retrace, but it was a very big move down. So really, we're going to concentrate on this middle level here, and it's going to gravitate either to the 107.80 or the 105 again. A break of either side is going to bode pretty well for the trend of next week. I would think that if we get a close above the 107, 20 moving average will be the logical target, and then following that, the 110 level. But a daily close below the 200 moving average and the 104.80 level, then we're going to start looking at targeting all the way down here at around the 101. So that's the next real level for this one. But at the moment, I think if you're going to scalp it in between these zones, look, the euro is obviously the one we're going to be scalping if we are looking at the dollar index anyway, and it has hit the resistance point at the 200 moving average. As you can see, it's done all the right things. It's done the lightning bolts that we've been looking for. It came back, retested the roll reversal zone that we've got here at the 100, did it perfectly, of course, touched the 20 moving average, and then off it went, and then it really ran. I have mentioned that several times over the last few weeks, as you know, if it was going to break the 100 and retest it, the moves up were going to be pretty good, and it got all the way to 104, which is a 200 moving average, which is, look, that coincides. This line was drawn so long ago because it has, it was obviously a roll reversal zone, but as you can see, it's really testing that level now. You can see that we've got the support, okay, we've got resistance there, and it has broken through to the 200, but now it's trying to get underneath it again. I think what we probably want to see is a bit of a breather from this one. My inkling is that it's probably going to take a little bit of a pause at the 200 and this very important roll reversal zone, and maybe come back down and retest the 101.50 to 102 levels. But again, just let price action be your guide. If price action starts to dictate what is going on there and it starts to push past the 200, then we look for a series of higher highs and higher lows and continue the trend up to the next real level, which is the 107.80, if you can believe it. And that's the level that we'd be looking at next if we actually get a breakout of here. So look, there is another little mini level here that we can pop in It's a bit of a pause zone. It's definitely a role reversal zone, but not extraordinarily strong. You can see we had resistance there and resistance there, but it didn't find a lot of support there. So that's the only caution for the 105, 106 area, really is what it is. So the first target would be the 106, but yeah, that's a break-even zone. That's what you're really looking for there. And the 107.80 is probably the main target. But again, I think we're probably going to see a bit of weakness here, and I would imagine it would probably pull back to around that sort of 101.80 area. 101.50, 101.80 is the zone. But yeah, all these levels here are going to prove to be just little bits of noise for it while it actually sets itself up for its next move. But it's done its job, and yeah, it's given us some pretty good trades. All right, the last one we'll have a look at is the US 500, of course. This one's been behaving in a sense as well. Look, it had the big move last week, obviously. We saw consolidation, a little bit of weakness this week. But look, that's expected. Yeah, really what we didn't want to see was another big green candle here this week anyway. We didn't want to see it all the way back up here without a reasonable pullback, because that's not what a technical market does. You know, we want to see technicals play out properly so we can actually trade them. And in terms of the trading game, it's doing it exactly as we would expect. You know, it hit the level that we were aiming for, which is that sort of 104 or the 40-40 area, really. You can see that there. We had that line drawn. That's been drawn there for quite a while now. And yeah, it hit that. It could have gone to the 200, no question, and it may well do, but that was a big exaggerated move. It's come back down to the roll reversal zone. This level here at the 3900 is very, very important. As you can see, it tagged it and then sort of bounced up off it. I think that I could see it trading inside this range probably for the next little bit. If it does that, I'd probably be happy. That would be my preferred situation here, if we can trade inside these two ranges. A break above the 40-50 is going to be what is going to convince me that we're going up to the next really important level, which is the 4180 to 4200 level. Okay, that roll reversal zone right there. So it needs to have a break up there, or a break below the 3850 would see it potentially getting back down to the 3800. So it's really scalping at the moment. I think we keep it really, really tight and sharp. Try and trade within this range until we get a daily close on either side. But this has done exactly what you would have expected it to do. You would have been taking profit at this level, and if you were shorting there, this is the exact place you would have been taking your profits, because this is the roll reversal zone, and it did touch it, and you should probably already be out. So hopefully you're able to take advantage of that, because although we didn't see big moves, we certainly saw some pretty good scalping moves. So I hope everyone's had a great week's trading. I think we've had some really good opportunities in the scalping front, but we've had consolidation at very important zones, which I think is important. It sets us up really well for next week. So if we can hold these levels for another 24 hours and get the US market out of the way, I think Monday will start afresh with some nice trends in some very, very key zones with very clear targets. Thanks everyone. Have a great weekend.